We're looking at the top 6 lithium companies on the ASX over the last month, with the strongest companies up 67%, and 2 are currently in the top 10 ASX momentum stocks, leading the whole market. We want to review their charts and the news explaining why they're up so much, especially global lithium demand, where Australia sits in the global supply of lithium, and whether Australia can benefit from the improved relations with the United States on critical mineral supply chains after the Quad meeting at the G7 last week. I'm Christopher Hall, and this is Finer Market Points, where we connect the leading market themes and top performing companies for better trading. Having a look at lithium as a hot topic, that's after the US has been looking for it, as 99% of the world's reserves are not in the United States. They come from Australia, Argentina, Chile, and China. So it makes sense for the US to broaden their horizons, where they're securing their pipeline of critical minerals to enable themselves to transfer into a greener economy, greener energy, and the battery age. Now, we've known for years since Joe Biden was elected that Australian or ASX miners with American operations have had a distinct advantage due to the US policy favouring shorter supply chains, although recent news expands that to Australian-based operations. Australia is probably a really sensible partner for the United States from a lithium perspective, because as the world's least dense mineral, there's a great abundance in Australia, as 53% of the world's supply is currently mined from Australia. Now, when we have a look at the mines in Australia, we can see a picture on screen here of a massive hole in the ground. That's open cut mining. And for lithium mining in Australia, it began back in about 1980 in Greenbushes. This is a picture here of Greenbushes in Western Australia. That's about a 3-hour drive south of Perth off the Southwestern Highway. And it started from the mining in 1888, I should say, as it was a tin mining town. So what happened over the years is tin mining continued, and Western Australia has been a strong mining part of the world for over 100 years. But over the time, the lithium metal has really only had a great abundance or great demand in the last 2 decades. What we saw in this period was that lithium was only really used for niche cases, like some applications for steel, castings, ceramics, lubricants, metal alloys, and also glass making. We've had a few oil shocks since this first mine and Greenfields was started mining. We've had environmentally conscious consumers change their focus of where they're going to deploy their capital and what they're going to buy. And we have a massive demand for electric vehicles driving that global demand for lithium. To put a number on the growth and the demand for lithium, we're looking at a couple of charts here from the International Energy Agency, where they expect the lithium demand to grow 40 times from the 2022 levels if the world is going to meet the Paris Agreement goals. So we're going to have a look at some snapshot of some charts here. This one here shows the minerals used for electric cars compared to normal conventional cars. You're going to see legend down at the bottom. We've got copper as that light blue. There's a lot more in that in electric cars than the conventional cars, and then it just keeps on growing out. The other one where there's a bit of crossover is manganese, but we're seeing a huge amount of lithium being introduced that wasn't there before. A lot more manganese, a massive amount of nickel that wasn't used before. Cobalt and graphite. Graphite comes out in even more than copper, the amount of used kilograms per vehicle. And there's also a bit of zinc, rare earth, and other metals and minerals coming into the electric vehicles that are not really seen in conventional or internal combustion engines or ICE cars. Other minerals used in the clean energy technologies compared to other generation sources. So this is where we look at the green economy and where we're going to get green energy supply from. Offshore wind uses a lot of zinc, huge amounts of zinc and massive amounts of copper. Onshore wind, same thing, huge amounts of zinc, not as much copper. Obviously, we've got a distance to sort out. The proximity of onshore wind is generally closer to the demand. Solar, we've got a huge amount of silicon, and then copper once again. Nuclear, well, there's chromium, a lot more used there. That's not really used in the other ways of producing energy. Coal and natural gas, they're the old world productions. Moving into the other ones, looking at the types of minerals used, they vary by technology. So we know that lithium, nickel, cobalt, manganese, and graphite are all used in electric vehicles, but it depends on the manufacturer and the battery supplier for the exact mix. But still, compared to an internal combustion engine, there is a lot more. Same thing goes for the amount of rare earth elements used and the winds for wind turbines, electric vehicle motors, and so on. Now, having a look at what we're seeing here is the share of clean energy technologies in total demand for selected minerals by scenario, comparing 2010, 2020, 2030, and what's expected in 2040. You can see on the left-hand side, lithium here, massive jump from 2010, not on the charts at all, that's the base level, going up huge amounts for 2040. The same is going for the rest of the metals. We're going from left to right, cobalt, we've got in the green, nickel in the yellow, copper in the copper colored, and then we've also got rare earth elements. This is showing you the amount of demand that's coming through. Obviously, lithium is right up there. Then the total mineral demand for clean energy technologies, 2020 compared to 2040. You can see if we're looking at electric vehicles and storage, that's kind of the green, which becomes the largest on the far right-hand side. That's no news to anyone who's been following the sector and seeing that this is where the massive demand is, and that's where the projected demand is going to be for 2040. Then we move on out and have a look at the growth in demand for selected minerals from clean energy technologies. And we can see here that lithium, we're going for the 40 times. This is where that number comes from the International Energy Agency. And that really brings us back into having a look at what Joe Biden and Anthony Albanese have announced together. So together on the 20th of May this year, 2023, they announced that they will strengthen the supply chain for critical minerals and invest in clean energy together. So recently in Australia in 2021, the Australian government set up a $2 billion loan facility to help facilitate critical mineral projects within Australia. And that's particularly buoyed by reports that Australia could be the home of more than 20% of the world's lithium refining by 2027. There's a caveat, and we'll get to that in a second. So the Australian-US partnership is critical because of what the US have called the US Inflation Reduction Act. Strange name, but the Act grants tax credits for electric vehicles that are built with materials produced by allies. It allows for countries like Australia to have free trade agreements with the United States and apply for loans and subsidies. For context, Australia supplies more than 60% of the world's lithium processing at the moment. It has years of experience and has established infrastructure for the lithium refining. Now, anyone who's read a history book on Australian manufacturing know that it's no longer a country with much manufacturing in it at all. It all went downhill when the United Kingdom joined the European Union. They stopped buying our sheep, amongst other exported products. That's a whole nother story in itself. When we look at what Australia does and why manufacturing has really gone downhill, we have phenomenal occupational health and standing laws. We have world-class workplace standards that are top-notch. And further still, our labour laws are nothing short of completely diabolical if you want to own a company and try and turn a profit. So that's part of the reason why we lost all of our automotive industry that was in Adelaide as our last foothold. And you can see the last HSV Holden special vehicle on screen there, and that's the team that built it. So bringing ourselves back onto the lithium side of things, in Australia, we currently have 2 facilities that produce battery-grade lithium hydroxide, both of which are suffering from major construction delays. So mining and retail conglomerate Wesfarmers, WES is their ticker, said in February of this year that its refining in Western Australia could be delayed by 6 months, pushing production out into 2025. Other refineries, one led by China's Qingyuan Lithium and another by US lithium giant Albemarle, are yet to begin commercial scale export after delays of cost blowouts. So Australia is known for its cost blowouts. Here's a nice picture of the light rail in Sydney, which if you're Australian or live in Sydney, you know that the cost blowouts went well and truly beyond a political nightmare. So moving through, we come back to Joe Biden and Anthony Albanese. To get the ball rolling, they announced at the press conference, Australian Prime Minister Anthony Albanese said the US President will support the Congress taking action to treat Australian suppliers and activity as domestic activity in the United States for the purpose of the Defence Production Act. What that means is that it effectively allows Australian green businesses to benefit from subsidies and protections provided to US companies under their Inflation Reduction Act. So what that has, well, that's the impact has been to prompt a whole lot of businesses globally to migrate to the US to benefit from its green subsidies. Now, Anthony Albanese noted that without these new support measures, hydrogen-based industries, for example, and a lot of electric vehicles or refining processes would have a massive incentive to be based in the United States. For those who remember 20 years ago, a similar thing happened when we're looking at solar panels and a lot of the tech startups moving to California and the tax incentives they provided some decades ago. There's still a legacy there, and that's worked very well for that whole western side of the country. Now, Anthony Albanese said the big risk with the Inflation Reduction Act is that you'll see the capital leave Australia to go to the United States, and what they're talking about together is addressing that. They both said that the countries are determined to, within 12 months, identify concrete actions toward the objectives laid out in this compact. Within the compact, Australia and the US aim to accelerate the proliferation of green energy supply chains, invest in novel battery technologies, and support development of green hydrogen technologies. Now, earlier this month, Australia also announced a $1.4 billion fund to aid the growth of green hydrogen technology. Through the newly established Australian-United States Task Force on Critical Minerals, the two countries will work together to expand global access to minerals such as lithium, which will expedite the global energy transition and meeting those Paris targets. Now we move ourselves over to the current lithium prices and the top ASX companies there. When we're looking at lithium stocks, there is a trading view indices built, and we can see that it has been coming up throughout the month of May. We've been having a good steady movement for about 4 weeks here. That's transpiring into showing strength on the Australian lithium miners on the ASX. We also see the Global X ETF, ACDC. This is an ASX-listed ETF that focuses on companies exposed to the battery revolution, if you will. Companies that will go from lithium miners through to refiners, battery producers, electric vehicle makers. And you can see there's been a good, strong movement here. We had the market lows back in October, but you can see the ETF hit lows in July, higher lows in October, and is making higher lows ever since and still been pushing a higher share price. It does help that the Australian dollar has been falling, and that does have a mix into how that performs, but that's another aspect to it. Looking at the top holdings, we see some familiar names for Australian investors on this list. We've got Allchem, we've got Pilbara Minerals, and we've also got Mineral Resources. They are some of the largest holdings within this ETF. Other familiar names include Tesla, Samsung, LG Energy Solutions, Mercedes-Benz, Nissan, other large international names that are exposed to the lithium supply chain and green energy revolution. Now we move over to the top 6 companies on the ASX. We've got performances from 38% rise to the month all the way up to 67%. We're going to have a quick look at these companies to understand really what they do, where they come from. So Winsome Resources is placed 6 with that 38% rise, 148% over the last year. Now they're focused on exploration and development of high quality spodumene concentrate suitable for conversion across many different battery applications. Their portfolio of leading exploration lithium projects in the James Bay region of Quebec province in Canada. It's renowned for world-class infrastructure and supportive mining developments. As we noted before, the lithium, a lot of it comes from Australia, but these are other regions as well and closer to the supply chain. We'll see another great chart of a Canadian miner and where they're showing the demand or domestic demand for electric vehicles are. That's their chart and a bit more on their project, their lithium mine. Nice little axe and hammer here down the bottom of the chart. Now, LEO Lithium takes out 5th place. It's a pure play set to be West Africa's first spodumene producer, expected to come online in 2024. It's also listed on the Frankfurt Stock Exchange. WXO is our ticker. Next is LRS. So an Australian Latin American explorer. The flagship Salinas lithium project is the Pro Mining District within Brazil. Their maiden JORC mineral resource estimate of the Colina lithium deposit is positive for them to kick on through and raise more funds and deploy the capital, we should say, to the project. Their Australian projects include other things like the Cloud9 project that is used in emission reductions, specifically for the reduction in methane emissions from cattle, a different part of green focus there. Next off is Xantippe Resources. XTC is their ticker. So they are focusing once again on high purity grade lithium. The project within Argentina, we can see here on the map within South America, and the lithium triangle that they're talking about, just near Bolivia, Argentina, and Chile, around those three borders. Now, LEL is Lithenergy. They have lithium and graphite focus. You can see an aerial shot of the sector that they're looking at, the concession area. So Lithenergy, they say they're a battery minerals company with a clear focus on the two exciting exploration developments. One, the Solaroz lithium project within Argentina, and the Burke graphite project within Queensland. Two different continents, two different projects, two different minerals. We do know that they're a neighbour of Allkem. Remembering Allkem was the largest holding within ACDC. So Allkem, here's a picture of their project just up the road. Very famous pictures, very well established and producing, very large producer. Solaroz is directly adjacent to the principally surrounded area with tenements held by Allkem. Lithium Americas Corporation is one as well. So looking at their project, they're showing a bit of a history from 1 million years ago, and then this is what it looks like today, and from a different angle. And then we've got Allkem all the way over here, where their project is to the right. What we can see, it's all situated around the Andes. Here's a bit more of a map to give a bit more context from an aerial view. There's Argentina, there's that same border, the three borders together. And then here's Allkem's deposit down to the south, and then a bit further up, we've got Allkem's other bore field, and then we're looking at their sites highlighted here with red. Moving on through to the next one is Cosmos Exploration, a North American lithium-focused explorer in Quebec, Canada once again. Here we're going to look at the charts, and we're going to look at the proximity of where the demand is. Here's the Cosmos over in Quebec. We've got Honda, LG, Ford, VW, General Motors, and then the Tesla gigafactories to the left-hand side, or the western and south part of the country. That's showing the demand. This is where it's tying back into the critical minerals and Inflation Reduction Act that we were talking about before with Joe Biden and Albanese. What we do see, these are obviously internationally based ones, and they have had strong tailwinds for a good few years now. This could be expanding out to the Australian projects as well. It does help if they've already got a foothold, they've already got supply chain conversations going within the continent of North America. And then if they do have the supply chains tied up with the blessing of the American government, United States government, then that can help the projects held domestically here in Australia. So we look here just to see that their Patriot Lithium is down the road from this project. Cosmos has been the #1 performer on the lithium companies on the ASX over the last month. That rounds out our top 6 of the lithium companies on the ASX, and we'll just go through that chart once again for those top 6 companies. We've got Cosmos Exploration, Lithenergy, Xantippe Resources, Latin Resources, Leo Lithium, and Winsome Resources being the top 6 lithium miners on the ASX this month.